target, right, is to fully replace the major banks. We very much attack the major banks on dramatically better value, right, across fees, cashback, interest rates, etc. Because these guys are charging outrageous amounts, right?
That's a question I always ask, which is, what are the big banks going to do with all these niche segment banks who have now super scaled themselves, right?
The choice in the market is great, but the problem of fragmentation, I think, does also not help. We're a big believer that you do need that sort of all-in-one solution, and that's what we've been building.
Ladies and gentlemen, welcome to today's episode of Couchonomics with Arjun. Beaming in from London is Richard Davies. Richard is the CEO of Allica Bank. Let me give you a bit of a context on Allica Bank if you haven't heard of them. I think in the UK you've definitely heard of them. In Europe, the chances are you have too. But for the audiences which come out of other parts of the world, Allica was founded in 2019 as a challenger bank, specifically targeting the small and medium enterprise. I'll let Richard tell us more about that. But what was most impressive is they have been recognized as one of the fastest growing fintech company in the Deloitte 50 survey. They were the fintech company of the year in 2024. And in 2025, they won the best business finance provider, which is apparently fourth year in a row, from the British Bank Awards. With that long introduction, Richard, welcome to I must say, the virtual couch.
Yeah, pleasure to be here. Thank you.
So, Richard, let's start. I think we want to get your perspective as someone who's been in the fintech sector before we sort of dive into Allica. Post-COVID, right, how have you seen if I may say, the UK financial services / fintech sector sort of evolve, right? What's changed?
Yeah, so, I actually came to Allica from Revolut, and about 10 years ago, I was involved in the setting up of Oak North Bank in the UK. Had quite a bit of experience in different UK fintech unicorns at different periods. And I guess clearly the fintech scene in the UK has really matured the last kind of 10, 15 years from its infancy. I think post-COVID, there was clearly that sort of bubble in tech, including fintech, in 21. But you've definitely seen now quite a few players that have really proven, I guess, that they're sort of well beyond that bubble phase and now have very serious scale of customer base, scale of global operations, scale of profitability. So, yeah, I'd say it's matured a lot the last few years.
So, and specifically in terms of the digital banking narrative, I remember hosting a roundtable, I think it was 3 years ago at the Singapore Fintech Festival. We'd just come back from COVID. I had about 12 of your peers, CEOs, around the table. And I guess the question was, and it was funny because it was quite an emotive labeling of the roundtable. It said, why digital banks fail, right? The intention was not to argue the fact that do they fail, but the point was that it takes time for banks to get profitable, unlike a lot of other fintech sectors. And there were certain sort of anomalies that existed, which were unique to the digital banking sector. Since then, if I take the UK, you have a very impressive story, right? A number of your peers, you mentioned Oak North, you mentioned Revolut, we have Starling, Monzo, Allica, right? What has been the shift in the narrative, right, in terms of digital banks, if you were to kind of wear a customer's hat?
Yeah, actually, I think customer hat and sort of, I guess, wider kind of investor hat is sort of, they're both interesting. So I think customer-wise, clearly these things have become very mainstream. So if you add up the customers of Monzo, Revolut, Starling in the UK, I haven't done it actually recently, but I'm guessing it's at least 20 million. So you've got a very sizable proportion of the UK consumer population that has one of those accounts, cards. Now, they're often still secondary rather than primary accounts, but yeah, that penetration is quite significant. And I think you've also seen the last sort of 5, 6, 7 years, major investment from the big banks on their mobile apps in particular to try and ensure those are strong as well. So I guess even if you're not banking with a Revolut, you're probably still seeing quite a bit of benefit on digital experiences people have copied and tried to catch up. I think on the SME side, there's been a lot on lending. So Oak North is a great lending bank, done a great job on that. I think on lots of sort of non-bank fintechs doing SME lending. So there's now about 250 different SME lenders in the UK market. So very diverse selection out there for customers. That was not the case at all 10 years ago. On the investor side, I guess you have now seen some, but not all, but some actually start to demonstrate they are really sort of massive engines of growth and profit beyond just customer numbers, which I think is quite key, right? There was always this huge skepticism that these things were worth what they are, but I think you are now starting to see some examples where, very much the profits and the profit growth, I think, does justify the valuation.
Okay, and so let me try and if you don't mind, double click on a couple of things you mentioned. Actually, there are three things I want to sort of click in, and that'll bring me to Allica very well. So first, let's just look at the SME sector, right? So the narrative globally still says that the so-called credit gap, which I think sort of extends to the banking gap, if I may use that term with the SMEs, continues to grow, right? So fine, it's all well and good that we have 250 lenders in the UK alone. Globally, we've seen quite a lot of, if I may say, a number of players coming, but the gap doesn't sort of close. One part of that narrative is, unless the big banks don't really come into the show, right, this gap doesn't close down because the small banks can sort of chip away on the edges, but cannot sort of solve for the problem. Your view on that?
So I think in the UK, at least, there's been a big substitution of major banks for challenger players. So according to the latest data, the challengers were about 60% and the major banks 40% of SME finance, which, you go back a decade, would have been 70-75% major bank. So there's been a retreat from the major banks, and you've already seen the challengers step in and fill that gap. It hasn't led to overall significant growth in SME credit in the UK. So there definitely remain problems in the SME credit market in the UK. It's one of the lower borrowing markets as a share of GDP there are globally. So we'd definitely not say that the problem's solved. I definitely would say that if you hadn't had all these new challenges come in, there would be a massive problem right now with the retreat of the major banks. So we've at least saved ourselves from a major problem, but there's definitely more to be done. And I think we have high conviction at Allica that customers do want a sort of super app or one-stop shop, whatever you want to call it, rather than having to try and navigate 200 different lenders for different highly specialized products. So we're a big believer that you do need that sort of all-in-one solution, and that's what we've been building across current accounts, cards, all types of lending, financial operations, etc. Because the choice in the market is great, but the problem of fragmentation, I think, does also not help in terms of solving the SME credit gap.
And if I may ask then, and I think you've kind of answered the question, but let me just ask the obvious question. Yes, there's 250 players, but I guess the TAM is still so large because there's such a significantly large customer segment that hasn't been addressed, and some who are being served are being served with a very narrow proposition. Hence, Allica feels kind of warm and fuzzy about their position in the market in terms of being able to grow year on year and be able to take a greater chunk, right? Is that sort of the narrative?
Yes. So we're pleasing amazing growth, right? You mentioned we'd sort of topped the fastest growing company rankings in the UK for a couple of years running. I think basically our strategy is quite differentiated because we are building this full service replacement for the major banks. And it's probably fair to say along the way we caused some collateral damage to the kind of smaller other challenges, but our main target, right, is to fully replace the major banks with a essentially a digital modern version of what they used to offer 30 or 40 years ago and have retreated from.
Okay, and if I may sort of dive right in, you use the term super app, and so there's a full comprehensive offering which a bank does. I totally appreciate that. Super app has certain different sort of connotations in the sense that people respond to super app, which is you're extending into what I call either adjacencies or next to banking services, sometimes going even beyond. And I firmly believe that there is a need for some sort of a super platform for micro and small businesses because they consume about 120, 130 different services. I did a piece of work because I'm a consultant for a living, which sort of, we looked at a 5-year study of small and medium businesses, and we realized they consume about 130 services. Financial services is a significant part of it, but there's a lot more. So is the intention here to take Allica well beyond just financial services, or stay in financial services and sort of add a few peripheral activities?
So I would talk about finance rather than financial services. I think we don't have a lot of, right to go and solve HR problems or something, right? But finance, there's a lot of adjacencies in financial operations to what we do. And we kind of think about a triangle across the bank, the SME customer, and sort of the accounting software and accountant as being pretty core to how you try and really add value and solve for the customer. So I'd say we're sort of still early on this journey. We have some things launched and live. We have kind of a dedicated team that works with accountants. We work a lot with some of the accounting software providers, but we see a huge potential there to move that forwards. Kind of solve for a lot of the core issues in financial operations where often you are seeing that be kind of almost separate, standalone fintech businesses right now, but we would very much view that as sort of attaching quite naturally to the sort of the payments and bank account proposition. I think that the other thing I'd say is I think there's quite a difference between micro and established SME. So we only do established SME. That's kind of unique part of our strategy. We sort of 5-10 employee plus sized companies rather than micros, which are typically one person companies. I think the solution looks quite different in this FinOps space. The sort of the real micro is really a person, and it's a lot about admin tools to help that person save time directly. And when you get that account as like a Monzo or a Tide in the UK, you're getting them when typically they're starting the company, starting the business. So they have nothing. So you kind of, you can give them tools immediately. They're simple, effective, save them time. They've got no existing process in place, etc. You look at our segment and say a 25-person company that's been established for 15 years. None of that is true. It's substantially more complex. There's different people involved in different parts of the workflow, different processes. They already have existing software and processes in place for all tasks because they've existed 15 years. And so we view the problem as quite a different one to solve. And rather than just build a few simple tools in your UI, it's probably a much deeper problem of thinking about how you integrate with some of the different parties in that ecosystem to solve make the processes efficient, make them automated, make them go away. We think there's a very big difference in the solution here for micro business versus established SME.
So, Richard, I totally agree with you, but that begs the question that, these 25, these companies, which, as you alluded to them as established SMEs, have been around for a while. They've grown. They have some structure, processes. They also have existing banking relationships, whether they like them or not. That's a separate point, right? So how do you guys go about positioning yourself in the sense this must be a fairly tough segment to sort of break into, right? Because at the end of the day, there is some level of trust and complacency, and sometimes both of them go together with this segment. So what's unique?
Yeah, so I can talk to you about our proposition. I think equally important here is go-to-market, because I think go-to-market is outside of micro, where it's trivial because you just get them when they start the company, and if you've got a consumer franchise, like you often get them because they're a consumer, right? Micro is trivial, whereas established is really, really hard for go to market. So proposition is, let's talk about current account. It's kind of three things. One is value. So sort of taking a leaf out of the Revolut playbook from when I was there, we very much attack the major banks on dramatically better value, right, across fees, cashback, interest rates, etc. Because these guys are charging outrageous amounts, right? Ultimately, they make very, very strong economics on the current account piece. So we still make good economics, but we give back a lot more to the customer. So first is value. Second is digital, like, yeah, great onboarding, great app, great functionality for, like, let's say workflows, permissions, expense cards, all that sort of stuff, right? You need as a 25-person business. And then third is we provide a named account manager for all our current account customers, which is something that's very popular. I mean, if you're a 10, 20-person company, often you've lost that named account manager from your major bank. And you do actually want a great person alongside a great app. And so it's those three things that we tend to find are why we win proposition-wise. But that still has the challenge of go-to-market, because you can have a great proposition, but if no one's heard of it, then you get nowhere. So, we've invested a lot, a lot in terms of having a growth team, experimenting across 16 different channels to iterate what works channel-wise, what messaging works, how we scale those the last 2 or 3 years. Because, the hardest thing here is that all these customers, by definition, have already had a bank account with someone in the market for multiple years. And they typically don't think there are better options available. Because guess what? For most of the last 20 years, there have been no other options. It was just the major banks. So, that go-to-market problem has been a really hard one, but happy to say we've actually now really well cracked that. So we've now developed really strong, diversified channel scaling where, we're bringing on serious amounts of new customers every month at a CAC that means we're getting 12-month payback. So, really happy with where we've got to on that.
No, that's fascinating and actually quite impressive. Let me sort of, we talked about, go-to-market, talked about value proposition. We hear a lot about open banking, right? We hear a lot about open banking, open finance in the part of the world I live in, which is the Middle East, right? Obviously, the UK was arguably the most progressive, right? Sort of mixed success initial years, it started to get more traction. But one sort of discussion we haven't seen emerge, or at least I haven't seen it emerge, is the conversation around open banking and how that's impacted the SME banking side of it, right? Have you actually seen, has that been to your aid? Has that been to your benefit? Or is it something that, it sort of, I guess, equals out the playing field, so you've had a better chance on it? What's your reaction when you hear sort of the word open banking and SME banking at the same time?
So I love open banking. I'd like to take some small credit for like the UK being early on that, because when I advocated to the Competition and Market Authority inquiry that was looking at competition in retail and SME banking in 2015 to say they must mandate open banking, which they did. So I love it, but it is one of those things that is very much a long-term foundation. There's been far too much hype often at points in the past, and it is building traction-wise in the same way that say, contactless payments in the UK built from like 2007. But these things do not just happen overnight. I think on SME, the problem is harder than consumer, particularly on established SME, because then you're into things like bulk payment capabilities via API and variable recurring payment capabilities, which are still, I think it's fair to say, pretty poor from a lot of banks on their API capabilities there. I think the main thing that's happened use case wise for SME so far is actually on the lending side, where particularly working capital lenders or short-term loan lenders will use open banking a lot to really get a strong view as to that company's expenditure types, income types, and try and also mitigate risk like debt stacking, where perhaps that company borrows from 3 different people in a very short period of time. So I've seen quite a lot of use case there on the lending side. I'd love to see progression on bulk payments, on variable recurring payments, APIs being better in the market.
Interesting. You mentioned APIs. I buy the fact that this open banking, like a lot of other shifts, are foundational in nature. I think, people get overly excited and they expect the world to change in months and years. And, usually it takes more than or nearly a decade. I totally get it. If I look back at last 10 years, and, we have this conversation in terms of what have been the 3 or 4 sort of defining catalysts of change, I think APIs are right up there with, cloud infrastructure, and in some markets, digital public infrastructure, especially in terms of identity and so on and so forth. But I still continue to hear the same story that banks and the quality of APIs are incredibly poor. There's no reason for it from a technology orientation perspective. Why is that still the case? I think it does come back to technology, actually. I'm quite out of date now. I've not been in a major bank for quite some time, but if I think back to my time there, you generally do have multiple legacy core systems that date from the 70s, 80s, or if you're lucky, early 90s, and typically a separate one for the retail bank and a separate one for the corporate bank. And in our segment in particular, that's really quite tough because an established SME customer could be on either the retail platform or the corporate platform, depending on their size and the history of how that major bank has sort of structured things and moved things around over time. And so you do find this disjoint where, you've got very old systems with middleware put on top for the APIs, and then actually different systems depending on which exact system the client's on for the size of client that I think can cause quite a lot of issues. So it's definitely a completely non-trivial problem for these major banks to actually expose very strong, consistent, reliable APIs for more complex use cases. Okay. Interesting you say that. We've seen some of the banks. I still think there's a lot to do with culture, will, and desire, because, I've seen banks fix it, right? And legacy banks with systems in the 70s, 80s, and 90s. And it surprises me that, you have this massive opportunity around, the SME gap. You guys have proven that you can make money on it, right, by even having a more valuable, more value-driven proposition that the banks offer. What I don't get it is why aren't they sort of willing to sort of close the gap themselves? Because arguably it would be easier because their cost of customer acquisition could be next to zero because they have a lot of those customers sitting on them. Anyways, will that be a different debate another time? I think out of the 170 episodes I've recorded, that's come up maybe 15 times, so we will park it. But we'll stay with technology, right? Let's take technology from a challenger bank's perspective, or digital first banks, right? How did you guys go about building your core banking tech? So is it all built in house? Have you guys worked with partners? How did you guys go about it? Because apparently I was reading somewhere there seems to be a direct correlation between speed to profitability and banks building their own core banking platforms. What route did you guys take?
Yeah, so we've got about 250 people in kind of prod-eng roles in Allica currently. We operate kind of about 22 squads. So kind of the Amazon single-threaded team model for like each one focused on a service that have kind of full control over delivering for that service. So we do a lot of build work, but it's fair to say we don't just build. We will also get components. I mean, where we get a component, it will always be SaaS based, integrated via API. But yeah, we certainly don't just look to build everything, because that is, I think actually that's the slowest way to market and profitability, actually, if you try and build absolutely everything from scratch. And I don't think anyone actually has done everything from scratch. I mean,
no, I don't think anyone has.
Revolut, right? They built a lot of stuff, right? But when I was there, they had GPS, which is now Thread as card issuer. They had Modulo as fast payments processor, a bunch of stuff, right? And then as they build more and more scale,
and they orchestrated themselves, yeah.
So we do similar to that Revolut model where we actually use Thread for card processing currently, and work with Clearbank for fast payment processing, and Comply Advantage for some of the financial crime, transaction monitoring areas. But yeah, so the heart of it is very much built internally, because that's where we think we create real competitive advantage. But if there's a good kind of SaaS-based API integratable component off the shelf that does something, we work with that rather than build it ourselves.
And what are you doing about our everyone's best friend AI these days? So how are you kind of bringing it in? Is that through third-party partnerships, combination of in-house capabilities and third-party? And which part of the bank are you mostly targeting?
Yeah, and I think we're having significant in-house eng capability. This is where AI really starts to make a difference, right? If none of your people are tool technical, I think it's much harder to work on getting any sort of material AI adoption beyond the trivial. So, I mean, big focus for us. I mean, as I'm sure it's for everyone right now, right? So, I think there's sort of many ways you can attack this. We have, I guess, focused on two areas in particular. Firstly is I mentioned the 250 product engineering people, right? It's the biggest part of our staff base. So how does that model evolve for the world of AI? I mean, the Amazon single-threaded teams model we use, it's been around, right, for 15 years with Amazon publicly. It's not like that we invented that. Whereas there is this question of what does that future model look like? So I think everyone would agree that it's less people in each squad. As AI tools give you greater productivity and also allow kind of more cross-skilling. So that's kind of something we're very much working towards, where we think squad size we can reduce perhaps by 2 next year, and have much more cross-skilling, right? So that we don't just have a web engineer and then a back-end engineer. We have a full-stack engineer that does both. We don't just have a designer and a web engineer. We have a designer engineer who can do both. So very much trying to lean into that kind of cross-skilling using AI tooling and then kind of higher productivity. But there's a lot of work that goes into that. I mean, talk for hours on this, right? But this is much easier done when you've got no code base at all than when you've got substantial existing code base. And so, for example, we're having to migrate our design system, which was only built until 2023, but to a new design system, because the new design system is kind of what's compatible with the sort of AI coding tools rather than our old one. So there's often a lot of setup work to actually really leverage the benefits. But yeah, a lot of focus there on how do we organize and how do we have the sort of tooling in place to maximize output from our squads. And then the other area, right, is how do you kind of find areas across the sort of client lifecycle and internal operations to really deploy agentic AI for automation. So, yeah, we're making some pretty cool progress on that. So very happy with that. And for example, we've got financial statements ingestion and spreading agent that sort of does the work that would have been done by a human underwriter historically, to sort of calculate things like adjusted EBITDA. We have an application handling agent that sort of will take incoming customer applications, check if they've got all the complete stuff, go back to this thing missing, various things like that. And I think you mentioned third parties. We work with third parties a bit. I mean, we do try and do most of it in-house, but we do a bit like I mentioned on our approach to tech in general. If there's something where we don't think there's a reason we would have a particular competitive advantage doing it because someone else has more scale, we will go third party. So for example, on financial crime alert, level 1 discounting, we've got a third-party provider there who's doing it across multiple payments firms and therefore has more scale of training data to work with than we have. So yeah, sorry, I could bang on for hours, but let me stop there.
So I'm going to ask you a question. How much time before Allica's account manager becomes an agent, or it's an agent part?
Yeah. So,
and do you see that coming on as quickly as some people talk about it?
So we passionately believe that clients do want humans. So we actually try and remove everything else apart from the human that talks to the client. We think it's the only thing the clients value. And we think the major bank strategies of cost cutting that broadly have been reduce the client facing population because they struggle to automate the middle and back office is the wrong strategy. So that's kind of the headline. But what I would say within that is you want to make that client facing person as productive as possible. And so, for example, that agent that helps the client get to what actually is a complete application for lending, that is quite a valuable thing, right? To help free up that human's time, because that can involve a lot of their work, right? And checking, have we got X, Y, and Z, and has there been error made here, etc. So that's kind of leverage on the human's time rather than fully replacing the human. But I don't see it as being kind of like a chatbot only bank. But I think you definitely create leverage on the account manager's time. And I think the other area that we're working on, kind of putting something live early next year on, is the client's ability to sort of get insight around the account and their banking and their finance. Kind of comes back to this sort of crossover into financial operations. So again, so banking UI is great to get common tasks done efficiently, but if you want to like go and identify certain things that are going on and get insight on those, it's not good for that at all. And many people over the years have tried to build dashboards for that, but none of them have ever succeeded. And it's because each client wants something different. So we're very interested in how we can have agent that helps kind of serve that need as well. So it's kind of hybrid, I'd say, kind of RoboCop style.
No, I get it. So, and again, I'm sorry to put you on the spot, but here's a question, right? So I was speaking to a banker last week or 2 weeks ago. I was in Singapore, and he kind of turned he said, Arjun, we're about 5 years away from apps disappearing entirely, right? And his argument was obviously aligned to what you're suggesting, which is, we're at this stage where we're empowering a lot of our functions, a lot of our people with, agentic AI. These are not just chat bots, but actually helping them do their work. We're also empowering our own customers to be able to use, if I may say, quasi-agents of their own, which live in our domain so that they can go searching for their own stuff. But he said what's quite interesting is as companies or individuals start to have agents themselves, right? And a lot of our world becomes agentic too. You start sort of questioning whether we're going to have apps in the future. What's kind of your take? Is this just typical clickbait, LinkedIn bullshit, or is there some genuine sort of a shift among you bankers to say, apps are on the way out sooner than, we all thought?
I mean, listen, I don't think bankers are generally well placed to comment on this. That'd be my first point. I mean, it's like a design question. And I do try and listen quite a lot to what's going on cross products, right? Well outside banking on how people think about what you raise, right? And my own view from listening to that, and you get very different views out there, but I think the views from people that don't have skin in the game in very much hyping agent AI are generally that the sort of GUI will still have a relevant use case, right? Because the GUI essentially has been designed to do the most common tasks that clients need to do very efficiently. And that will be more efficient than doing it via kind of natural language. And I'm giving an example. I can go in to make a payment on a decently designed banking app that I do commonly and do it in like probably 10 seconds flat. That's going to be very hard to do via natural language, right? So that for those sort of like frequent high frequency use cases, GUIs are like generally the most efficient way of getting it done. But clearly what the GUI doesn't allow you to do is low frequency use cases as well. Those get buried in the GUI and are hard to find. And it doesn't allow you to do customized stuff, right? That's not part of the GUI, right? So that's sort of where I think I see the sort of blend, right? I personally still, I think, subscribe to the view that even in 5 years' time, you want a UI that's getting the common stuff done super quickly and easily in like 3 clicks. But then the other stuff is handled via kind of command line, natural language, voice, whatever. But I'm a banker, so I take my caveat at the start, which is I probably know nothing.
No, all right, great. Let me move to the next topic. We all over intellectualize these days: digital money or digital assets. So, assuming the UK approves the sort of the pound pegged, I guess, digital money, whether that's stable coins or tokenized deposits, CBDCs, some form. How does that play out in the SME space? Are they all super excited about it? Are you super excited about it? Can you see tons and tons of advantages, use cases emerge?
So I do think about this quite a lot. It's definitely an area that's got a lot of hype right now. I think for me, there's 3 main use cases for stablecoin. The first is typically emerging markets where the currency is volatile. There may be capital controls, and people like to hold dollars for stability, while also be able to spend locally. So, for example, as angel investor in Dollar App that does that in LATAM, and kind of got into that in 2021. So that's definitely a use case. Secondly, the international payment rails via SWIFT are not good, slow and uncertain. So for sure, there must be an improvement on that, right? And then the third is probably more nascent, but corporate treasury management, where sort of programmable nature of some of this may allow for high automation efficiency of corporate treasury management. Now, that may be more likely, in my view, on regulated sort of tokenized deposits than stablecoin, but it depends on how people feel about risk on stablecoin. And how that sort of reputationally develops over the next few years. I guess none of those are really SME right now. I think the middle one is for us to work with people on to make international payments good for SMEs, but they shouldn't really be being exposed to the stablecoin. The first one doesn't apply to the UK. Hopefully won't apply in the future to the UK if we keep ourselves stable. The third one is very much kind of large corporate right now, I'd say.
Corporate,
will it move to SME? Maybe, but I'm pretty doubtful, to be honest, because, SMEs aren't even using money market funds right now. They are not looking for any complexity. So, right now it's sort of a research topic and interest topic for me, but not something outside of the second use case, sort of how we do international payments better.
But you mentioned how do we do international payments better, but you also did mention the fact that do we want to expose them to sort of stable coins or not. I think SWIFT is an interesting discussion. I don't know if you have a view on it. SWIFT themselves seem to have acknowledged that they need to kind of evolve. They've kicked off a number of different, innovative ideas, some of them actually taking them well beyond what they're actually known for, which was largely a messaging system, right? Do you think you guys as banks are better off with a new re-energized SWIFT versus having to find new ways to sort of make those cross-border payments for SMEs?
Yeah, so I guess this is definitely an area where we're not going to build it, right? We are
after some innovative
to see how different players build a solution here, right? And we would definitely want to work with the players that build the best solution. Is that Swift? Yeah, potentially. Is that someone else? I think very potentially. All I would say is, again, it's not going to happen overnight. There's been people like kind of Ripple, R3 for maybe a decade now, right? So, it's sort of very important we solve this, because I do think Swift is very poor. It just takes too long. And the fact that uncertain fees during the correspondent chain, it's really quite poor. So there must be a better solution than that. And I do think blockchain plays a role in that as a technology. Is it stablecoin? Is that something else? I don't know, right? We would not build that ourselves. We are very interested to work with providers that build a great solution there.
Fair enough. Right. Let's circle back to the banks. I'm cognizant of time too. I know you work for Revolut. You can choose not to answer this question if you don't want to. A couple of days ago, we saw a $75 billion valuation on Revolut. I guess 3 questions. Your initial reaction, is this great news for UK fintech, but does it also not carry a certain risk, which has sort of their fears of that sort of, if they don't live up to their valuation, do they put a drag on the entire sector, which you're a part of? Just wanted to hear your views.
Yeah, so I think it's amazing news for UK fintech and the fact the UK has got the most valuable private company in Europe, and it's right up there with Nubank, right? It's sort of one of the two.
It's a similar valuation, except they're 1/3 on the revenue and the income side, but that's okay.
Yeah, and I guess actually it's been ages since I was there, right? So I'm not privy to any of the numbers, but my understanding is they are posting faster than Nubank growth rates. I think that's certainly true of the historics I've seen. And it is like a return on equity that's now in the 30s. So I guess to believe that $75 billion, a bit like Nubank 2 or 3 years ago, you're saying, look, if the return on equity is like super high, right, kind of off the charts against a traditional bank, and if you can sustain EPS growth at like 75% or something, then actually that valuation is justifiable. It comes down to that. Do you believe the ROE and the EPS growth can be sustained?
But from a sectoral perspective, you don't fear that we might have a Klarna moment here? And then that sort of puts a drag on the entire sector? Sorry, it pulls a drag on the entire sector?
No, not really, right? Klarna's not profitable, so the argument for Klarna is a pretty hard one to make, right? Because it has almost no fundamental valuation basis that I can see right now, because it's losing money, right? And it's been going for like 15 years. So it's not obvious why Klarna's worth 15 billion to me right now, right? Whereas you can make a case I just made, right, for why Revolut's worth 75 billion and why Nubank's worth similar, which actually grounds it in the same sort of metrics that you would ground a traditional bank in, right? Just the metrics are much higher ROE and much higher EPS growth. So I guess at least on Revolut and Nubank, I can make a rational argument as to valuation. I think Klarna is very hard to, right? It's still loss-making.
Yeah, no. I think my point was not to sort of compare it to Klarna. You've got a very, very valid point in terms of why does Klarna even be valued at 19? I think the story I was trying to draw was that the crazy valuation Klarna enjoyed, which was 45 billion in the middle, and then kind of plummeted to about 6 billion. The point I was trying to make was that actually put a drag on the entire BNPL sector, right? And actually that impacted pretty much every player globally, because, you hear the 45, there's this sort of euphoria, right? Then you hear the 6, everybody goes under the table, and then everybody gets impacted. So my view was, I have an argument. I think 75 can be believable. I do think there's lots of smart people who've kind of done their numbers. It just felt incredibly lofty to me. I actually went on print on it yesterday to say, congratulations, but there's a lot which is factored in. And one of my concern is Revolut is a multi-jurisdiction play, which in my humble opinion actually makes it more complex, because you have a number of regulators that you're juggling, right? Which kind of brings in a bit of complexity. In any case, we don't need to talk about Revolut. That was just a question I wanted to run past you. There's an interesting question I do have. It's completely sort of away from all of this. It was very interesting when you said, the split between challenger banks versus incumbents or traditional is sort of 60-40, right? So if I was to kind of sort of say that, we're kind of getting to this steady state world where the challenger banks will continue to grow in this space around SMEs, right? And hopefully, the big banks will come on board. But, you guys are going to be, the collective lot is going to actually drive most of the growth, right? What do you think is the real moat now? Right? Is it sort of lower cost to serve? Is this your ability to sort of underwrite very sharply, which I think Oak North, I think kind of led on initially, or there's this rapid sort of product development in terms of both, I guess, re-engineering existing products or widening the offering. Where does the moat sit?
Can I take all of the above?
No, I should have said it in my question. Well, okay. What is actually arguably most defensible? Let's put it that way.
Yeah, I mean, I guess so. The way I always try and frame it internally is you want great customer experience with super low marginal cost. That is the defensible moat, because if you have both those things, it's very hard for anyone to come and get you, because customers love it. And as you scale, you're not adding lots of cost, right? So the bigger you get, the more powerful you are. And I do think that's where Revolut has succeeded, because they have a very low marginal cost. And so scale is their friend. And that's basically what we're doing at Allica, right? Within marginal cost, I would definitely include cost of risk. So how good are you underwriting if you're lending? So I would capture that within there, because if you've got low operating costs but you spray losses, that doesn't help at all, right? If you're a lender, and I think how you drive low marginal cost, right, is about really good prod-eng capabilities. So which is kind of your speed of shipping. So I have taken it all, but I think great customer experience with very low marginal cost.
But you've been more eloquent in your answer than my question, I guess. So we'll give that to you. We didn't talk about regulation at all, right? And that's quite interesting. Most bankers usually come on and sort of start saying the regulator needs to do more. Is there something in terms of a policy shift that you think is needed, i.e. to sort of both unlock the opportunity, allow you guys to grow even faster, although you guys are doing a brilliant job?
I mean, listen, I do think in the UK, two things are needed. One is not regulatory, it's government. But most countries have like a government-backed SME development loan scheme.
Yeah, I was going to say.
The UK's one is just too small. It's like a fourth of the size of the US one relative to GDP. It's a third of the size of the German one or the Spanish one. It's just too small. And if we want growth in the UK, it's an obvious lever. Yet somehow the government still seems to miss it every time to actually pull to increase.
And my question is why? Because I'm sure you guys are all part of the consultation body. I'm sure there's a lot of conversation which goes on. It's a big problem. Is it just not high up the political agenda?
That's a great question, right? I don't know exactly. I fear it's because there's a bit of fiscal cost attached to it, and the government's got to do that. Obviously. And we've published a week or two ago, sort of research by Oxford Economics that shows that, right, that £1 million of this type of lending produces like £300,000 of tax revenue over 5 years, right? So it would pay for itself, but not in the very short term. And I think that's the challenge, that the government's got no money and is very short term focused on where it spends its money.
And you said that you said two. One was policy.
And on the regulatory side, because you're right, I can't run a bank and not have something on the regulatory side. I would go for the UK has this weird thing for some non-retail lending, which isn't in most countries. But like, if you only lend in the UK, like we do right now, you get extra capital add on, and we also clearly hold capital against like UK macroeconomic stress and various other things of credit. It's completely non-obvious why like about 10% of our capital requirement is due to only lending in the UK on a very arbitrary basis. So we'd love to see that change, because it seems very misaligned to the government's objectives and kind of also illogical, because we're already holding capital against UK macro credit stress. So it's a bit of a quirk of the system that I'm hoping the regulator does change next year.
Okay. All right. A couple of your peers, right, Oak North First, Starling Next, who've built, I'd said, compelling tech, have sort of spun off tech companies and taken their platforms globally. I met the Starling team very recently. I think they call it Engine. Oak North obviously did it years ago, went to the US in a big way. They signed up. Is that part of the plan, or is that too much distraction?
I mean, so we actually... We've tried it, right? We've actually got a live client on our tech in another part of the world. So we can do it. I think what we've found is the sales cycle is very slow. We haven't put a lot of resource into it. So we're kind of not probably going to bother pursuing that particularly hard, but we'd rather go overseas kind of as a core value prop, as kind of what we do in the UK, right? I think Oak North has backed off their thing, Acorn Intelligence, I think it was called. I don't see much about that anymore, so they may have concluded the same thing after kind of putting more into it, that it's pretty damn long, hard sales cycle. Starling, don't know, I wish them luck, right? They're clearly going very, very hard after it. But But yeah, if you look around, actually, there are not that many examples of people successfully doing this.
You guys, I think the UK banks are the ones who've actually the ones who've led. I haven't seen many come out of Southeast Asia at all. I've had several conversations, but most of them are not. The Chinese do it, but they do it in a very different way. They build mega platforms and so on and so forth. It's a completely different sort of story. But no, I haven't seen it.
So we can do it. We didn't find huge immediate sales cycle traction, so we sort of backed off a bit.
Yeah, and I think it's a very different business also, right? At the end of the day, you're then looking to become a technology company, and then you need to create two tracks in terms of development cycles. Multiple jurisdictions walk in. Product features are slightly different. You can argue that SMEs behave in a similar manner, but there is also certain similarities. Is there any intention? Allica has been going around for 6 years. Is there any intention to move to adjacent markets?
Yeah, we're having a good look. Currently, we've not actually placed any sort of bet yet, but we are, I think, quite interested in doing that next year. So won't say more for now, but yeah, we are definitely sort of on the radar.
Okay. My last question, 2030. How do you see Allica?
Yeah, I mean, we should be well over 10% penetrated to our segment in the UK. And hopefully that's also causing the other players, particularly the major banks, to have to sit up and invest in this segment to get better. And yeah, we should also be in another region, expanding there. Hopefully with kind of a current UK-sized business in another region is the aim.
So let me ask a question, and I'm sorry, I was going to say that was my last question, but here's my last question. Do you see one of the big banks go out and buy one of you guys out eventually when they realize that, it's something they can't do themselves, but they want a piece of the action? Or do you think they just come on the cap table in some different way?
I don't want that, to be honest. I really don't want that if any of the UK banks. I mean, I know you might consider someone like Chase, right? Or you might consider working with like some of the other neobanks that have got big global scale, but I really wouldn't want to do it with a traditional bank in the UK.
Fair enough, Richard. That's a question I always ask, which is, what are the big banks going to do with all these, if I may say, niche segment banks who have now super scaled themselves, right? And they've proven themselves to be profitable. To me, one way to get in is just get on their cap table, play the value game, don't ruin the bank, because buying them and ingesting them would be just, destroying it. And there's enough value which has been destroyed in the financial services sector, as a number of fintechs have vanished over the last sort of 10 years. People don't talk enough about it, where, big banks have made sort of investments, brought them in, and nobody's ever heard from them ever again. I want to thank you. Appreciate you taking out time. I guess it's getting a bit cold in London. I'll be down there in a couple of weeks. I'll give you a shout if you're around. We'll love to grab a cup of coffee. But with that, thanks a lot.
Great. Thanks. Pleasure.
Right. Ladies and gentlemen, that was Richard Davies, CEO of Allica Bank, joining us from London. Quite an interesting perspective. We actually got quite deep into how they run Allica. So there are definitely some nuggets of wisdom, which I think other parts of the world can take away. So with that, I'll say goodbye and see you next week. Bye-bye.